Hey everyone, it's Rob B here with Rob D, and you are listening to the Property Podcast. Rents are going up at the moment, and rapidly. So in this episode, we explain to you why it's happening and what the future holds for rents.
Welcome to the Property Podcast. This is the show where we take time out from advising a multi-million pound property fund, which you can learn about at portfolio.co.uk, and putting together hundreds of transactions every year to share some of what we've picked up along the way for free. One of the wonderful things about investing in property, of course, is the rental income. And the rental market has gone thoroughly bonkers recently. We give you everything you need to know about that as an investor coming right up. And to make sure you get all the essential property news coming to you every single week, get signed up to our Property Pulse newsletter. It's completely free. It's a 5-minute read every Friday morning. You can sign up for free at propertyhub.net/pulse.
So it's time for our news story of the week now. And this news story is brought to us by The Guardian, but it's actually reporting on some data from Rightmove. And this data shows that while the property market is hard to kind of call right now, some people are saying it's fine, some people are saying it's pushing on, and obviously there's others saying it's, falling. The data is all over the place, and depending on the sources that you access and use, it's a bit conflicting. But this news story reports on a segment of the market that has gone up in price slightly, and it probably shouldn't come as a surprise. And it's properties that appeal to first-time buyers are on the up. And properties 1 or 2 beds in particular have seen prices move up 2% versus a year ago. The first-time buyer section of the market is outpacing the rest of the market, with sales now 4% higher than they were in March 2019. So it's really, really interesting at the moment, the property market. It's hard to understand what's happening. But actually, this part of the market makes sense because while interest rates have pushed on recently and people looking to move at the upper end of the market might struggle now with the cost of mortgages, this lower priced area of the property market is being really resilient. Part of the reason for that is that it's not stretching for people to access this segment of the market. Now, Rob, you've previously said that you felt that if any area of the market was going to suffer or suffer first, it would be those at the higher end, the upper end, because after COVID, there was a lot of people that raced out of the city, particularly London, went to buy big homes, an hour, 2 hours commute from London, a change of lifestyle, and those property prices accelerated hugely during that period in time. But these 1 and 2 bed properties, obviously smaller, less space, didn't. So it's probably no surprise that we're seeing this area of the market being a bit more resilient and actually pushing on in pricing.
Exactly. I believe when we did our predictions at the beginning of the year, we said that it was going to be a confusing year and you're going to have different parts of the market doing different things. And one of those was that smaller properties were going to do better than bigger ones. Because when it becomes more expensive to finance a property, what's going to struggle the most? It's going to be the ones that have recently gone up in price the most and the ones that are already the most expensive, therefore the ones that where borrowing costs are going to have the most impact. And so that leads you to larger properties and it leads you to London and the southeast. And that seems to be what's happening. I think another factor is motivation. So if you are trading up or moving just because you fancy something a bit different or even downsizing, there will sometimes be a time pressure and a need for that to happen. But a lot of the time, it's the kind of thing where you go, well, yeah, that would be nice, but it's okay. We can do another year where we are and wait to see what happens with the market, wait to see what happens with mortgage rates. Whereas for first-time buyer type properties, that desire to get your first home is still there, especially because the alternative is to continue renting. And rents have absolutely gone through the roof, which leads us nicely into today's topic.
But actually, before we race into rents, let's just acknowledge you as a wonderful community and audience. Thank you so much for supporting our crowdfunding campaign. It ends today, so that's it. No more talk of crowdfunding. At 6 p.m. today, that is the cutoff. So if you've been thinking about it or researching the offering, you've got till 6 p.m. today. But Rob, the cutoff is coming, but it's not about it ending. It's about the contribution. It's about how everyone's got involved. It's about how we've got this huge community of investors now coming on this journey with us. And it's a mixed emotions, right? It's gratitude, it's excitement. It's hard to pick which is the leading emotion right now, but they are all happy and positive emotions.
Yeah, I love the fact that over 1,000 people have chosen to back us and what we're doing. They believe in what we do. And I'm even more excited about all the things that we're going to do now because we're bringing all these people with us. And those people are going to get lots of exciting perks depending on the level that they went for. And so we're planning all that now. There's some really cool stuff in the pipeline. And if you are one of those 1,000+ people, then congratulations. I think it's going to make listening to the podcast and hearing some of the stuff that we're up to a whole lot more exciting, knowing that you are a shareholder. So yeah, thank you so much. There's a tendency for everything to be branded as a crisis. If something's a crisis, it means politicians can get excited about it, they can push for extreme solutions, and they can make the other side look bad. So everything is a crisis. So it's no surprise that at the moment we have a rental crisis. But you know what? In the case of the rental market, I don't feel it's too far off the mark. The national average rent is now closing in on £1,200. I can remember when that was about £900. That wasn't long ago. It was a year or two ago. And now in London, £2,500 is the average asking rent. And it goes beyond just the amount of rent as well. From speaking to friends who are looking to rent in London at the moment, it's becoming the norm to pay 6 months rent up front. That's the entry point now, and you're now having to offer a year or find some other kind of strength to your application if you want to be competitive. So what is going on? Why is this happening? And from a property investor's point of view, well, this doesn't sound like such a bad thing. So is it going to keep on happening? And from looking at the latest data that's come out from Rightmove and Zoopla, both of whom have put out really interesting reports over the last few weeks, it seems that the cause is actually really straightforward. It comes down to 3 factors: high demand, low supply, and people's ability to pay. So Rob, let's cover each of those in turn and start with what has been an absolute explosion in demand.
There certainly has been. And it's incredible when you actually get into the numbers. You know, we are in this industry day in, day out, and some of these numbers took me by surprise. They're just not reported on. It's not the type of stuff that you would hear or read every day. You do know, though, that demand for rental properties has increased significantly. Since April 21, more people have been coming into the UK than leaving it. The level, though, the number may surprise you. 500,000 people over the last year. So the population has gone up by 500,000 and will probably increase again when we get the next set of numbers. Now, this has led to inquiries being up 173% higher than 2019. Again, huge pressures on the market. And overseas student numbers have increased a lot as well. They've gone up by 18%. And the reason why that's significant is that puts a lot of pressure on city centre flats. So I've heard people in the past say, oh, well, city centres, they've overbuilt. Well, in so many city centres right now, we have a dramatic undersupply of property. Manchester in particular has really suffered from an undersupply of property. Now, Manchester is absolutely thriving, and you look and there's buildings everywhere, but it just can't keep up with the population increase. And because of that, flats are finding tenants faster than any other type. This may just be, oh, wow, that's really interesting. But think about how this has changed. 2 years ago, nobody wanted to look at flats or apartments. And probably partly because of that, people switching off to a segment for a while, it's become the in-demand area for the rental market. So demand across the board, whether apartments or houses, is really, really high right now. So that is one of the contributing factors to this rental crisis. So while you have a lot of demand, that's absolutely a pressure. But the other side of it is supply. But something else that's exaggerating this rental crisis is the supply factor.
Exactly. So if you doubled the demand but doubled the supply, no issue. But what's actually happened is you've more than doubled the demand and the supply has not changed at all. This was a figure that amazed me. There's roughly the same number of rental properties available today as there were in 2016. And in 2016, the population was roughly 2 million lower than it is today. So you've got 2 million extra people and no more rental properties. So even if you put aside lots of other trends that are playing out and you just look at the pure supply and demand, that is a huge imbalance. And just as there's way more demand than there was in 2019, there are fewer properties available. So Rightmove report that there are 46% fewer available rental properties than there were in 2019, which means basically if you go on Rightmove and have a look for something to rent, they're going to be half the listings that there were to choose from because, understandably, tenants are staying put. So you've got way more demand and no more supply. And you don't need an economics degree to tell you that under those conditions, you'd expect prices to rise. But the thing is, rents can't just rise forever. There comes a point where people just can't afford to pay anymore. So the ability to pay is a big factor as well. So historically, if you look back over the last 20 years or so, rents have tended to settle at a level where a single earner will pay about 30 to 35% of their net income on rent. That's kind of the normal range. And at the moment, that percentage is sitting slightly above 35%. So it's historically high, but not ludicrously high, which suggests that on average, rents are just about still affordable. Rents are going up, but people can still afford to pay them. But Rob, what this masks is that some people are more able to pay than others. So if you're in the private sector, you'll have had wage growth, which is lower than inflation, but still reasonable, still higher than we've had in recent years. If you're in the public sector, you'll have had less wage growth on average. And if you're reliant on benefits, then your housing benefit will have been frozen, so you won't have any more ability to pay higher rents than you would have done a couple of years ago. There's also a big factor of whether you're staying put or whether you're moving. So rents for new tenancies are up 11% over the last year. But if you include all tenancies, including renewals, they're only up 4%, which shows that landlords aren't just hiking the rent for absolutely everyone as soon as they can. So what this means is that if you're in the private sector and you've been in the same property for a few years, you probably haven't felt too much pain. But if you're in, say, the public sector and you've needed to move, then you've got wages that might have gone up by a couple of percent, but rents that have gone up by more than 10%. And like I said earlier, you're being asked to produce 6 months up front because there's so much competition and landlords can ask for that. You end up with a situation where, on average, rents are just about affordable, but for some people, they very much aren't.
We have nobody sponsoring us for a mattress or funky software, but instead, we are going to talk about our own businesses because you know what? They're the ones we love the most anyway. And Property Hub Invest is a great service for a small group of people. If you are the type of investor who's hands-off and wants to build a portfolio but doesn't have the time or doesn't want to put the time into building that portfolio, then Property Hub Invest may be right for you. To check out if it is a good fit, go to propertyhub.net/invest, fill in your details there, and we can have a chat to understand if we are best placed to help you build your property portfolio. So before we talk about what's likely to happen in the future with rents, let's quickly cover a solution that's banded around a lot of how this could be resolved and sorted, and that's rent controls. And while the intention of rent controls is a good one to help people, it's something that's not going to work because it discourages people entering into the market, whether that be individual landlords or huge PRS companies. They're going to be far more reluctant to enter a market where rents are capped and they can't control their income. And we've already heard that one of the things causing this rental crisis is the fact that there isn't enough supply. And what you would see if rental controls were put in place is the demand still sitting there, but the supply getting worse and worse because less people enter the market and people actually exit the market. Then you'll see scenes of huge queues where people are desperately trying to get a rental property when it comes onto the market. So the quick fix of rental controls is not actually a quick fix. It doesn't fix anything at all. It just actually makes the problem worse. So we know what factors are in play at the moment. We know rents have been going up at a rapid rate. But of course, we all want to know what the future holds as well. So what will happen? Well, rental growth is predicted to continue to rise, but not as aggressively. And it'll go to about 4 or 5% a year. And that's mainly because rents not being able to keep ahead of incomes forever. But this will be very area specific. In London, rents could actually fall because affordability is so stretched in London. We told you before that rents are 35% of income across the country. But in London, it's actually 50% of an individual's income that goes on rent. So we wouldn't be surprised to see London rents slow down in its growth level or even possibly fall. And Rob, you've been reporting on it for the last few weeks and months that you've been seeing that happen firsthand and that the London market isn't accelerating as much as it was and rents are starting to become a little bit more sensible. So the factors that we talked about are still at play. So you've still got demand challenges, you've got supply challenges, and the ability to pay for certain segments of the market is still there, although some becoming very, very stretched. So over the next 12 months, overall, the UK market will probably see increases, but we may see certain areas not continue to go up, and some areas, like London, may even fall.
That's right. I think we've seen weird markets in so many different areas over the last couple of years. So countless markets where, because of COVID, you had these massive distortions. We had a boom followed by that boom unwinding. With the rental market, it seems like that's just not going to be the case. None of these factors are going to be resolved quickly. And we've talked a lot about what that means from a tenant perspective, but what does it mean from a property investor perspective? Well, it's pretty good news. I don't think you could, even as a cold-hearted investor, want to see rents going up by double digits and loads of people struggling to find anywhere to live. That's just not very nice. But rents going up by a smaller amount consistently every year, the ability to find tenants easily, have minimal voids, have lots of choice about who you take on. Well, that sounds pretty good. And the ultimate result of all of this is that yields are improving for investors. So because property prices are, let's say, flat at the moment, depending on who you listen to, could be up a bit, could be down a bit. Obviously, it massively depends on what type of property and where in the country you're looking. But let's just say, on average, it comes out flat. But then you've got rents that are going up. Then it means yields are improving all the time. And this is very welcome news at a time when people's mortgages will be getting more expensive. So if you're coming off a fix in the next year or two, then you've got the prospect of your mortgage costs going up. Then the good news is since you took out that last mortgage product, the rent that you can charge has probably gone up significantly and will have gone up even more by the time your fix does come to an end. So it may or may not completely offset it, but it certainly helps. So I think we can say the rental market is not in a good state right now from a tenant's point of view. And that's not a good thing for anyone. A market this important needs to work for both sides. It seems like it's not going to continue to be this extreme, but it is going to settle down to a level where you've got steadily rising rents and plenty of choice and improving yields. And as an investor, that's a future I can buy into.
Something we should all be buying into, not that you have to pay, of course, is our wonderful YouTube channel. We've been putting more and more on the YouTube channel week after week. I actually say we, but Rob D has kindly stepped up and has been smashing out the content. And we've got a wonderful video on the rental crisis. So if you want to get into this in a bit more detail, make sure you get over to our YouTube channel. This particular video is called Why the Rental Market is in Turmoil. We'll link to it in the show notes. But when you go over there, make sure you subscribe and turn that notification bell thingy on, because then you'll be updated when we put out a new video. And we're putting out videos all the time right now. There's so much great content. So if you're loving a podcast, you'll absolutely love our YouTube channel. So go check that out.
Okay, on to Hub Extra. We're just going to squeeze in a little bit more before the end of the show, where we like to give you a tool, a resource, something to make your life a little bit better. We've shared a few AI tools recently. And Rob, great news, I've got another one. This one is from Microsoft, who've sort of become one of the leaders in this space. And they've now come out with a tool called Microsoft Designer. So you can find this at designer.microsoft.com. You may have thought that Microsoft Paint just couldn't be improved upon, but somehow they've done it. So how this works is you go into Microsoft Designer and you type in a description of the kind of image that you want. So I've just typed in an Instagram post to promote a new episode of the Property Podcast. Then using AI, it's come up with a load of designs for me to choose from that's got various images and things like that. And I can then go in and tweak it and make it however I want. But the extra cool thing embedded in there is it's got an AI image generator. So if for some reason I decided that I wanted a picture of a little Oscars type statue in the shape of a house to go with this episode, I could just type in a description of that and actually go and generate that image, not go and find some clip art or something or a stock photo. It would actually go and generate that image, and the results are really, really good. So this is another of those tools, and we saw it when we were talking about ChatGPT as well, where it's not like it comes out with a perfect output and you just kind of paste it into whatever you're doing, but it gets you started, it gives you ideas, it spares you from staring at that blank page. And especially with the image generation built in, this is really cool. I can see myself using this a lot.
Oh, I'm excited, Rob. I've already been trying to sign up as you were talking. It looks super cool. There's so much happening in the world of AI right now. I think at some point in the not too distant future, we need to do a follow-up episode on how you can use AI as a property investor, and maybe just generally as well, because I know we step outside the property a lot on the podcast, and many of you appreciate that. So maybe we can talk about how we're using AI across the board to be more productive, using it in our business. If that's something you'd like to hear us talk about, then do let us know, because off mic, I think there isn't a day that goes by where we don't send each other a message on AI or have a quick chat about it, because it is just fascinating what is happening right now. But don't worry, we'll not get so distracted that we won't record an episode next week, because next week's episode is a big one. We have the market update, so make sure you join us for that. So much going on right now. And of course, in between, we'll be back with Ask Rob and Rob on Tuesday. So that's us done for now. Until we join you on Tuesday, take care, have fun, bye-bye.
Bye-bye.